And welcome back. Well, student debt is huge. According to the U.S. Department of Education, it now totals, get this, more than $1.5 trillion. So how has COVID-19 affected this crisis, and should you pay it down? Drew White and Emma Neverman are with Leader Financial Group, and they join us now with advice. Hey, guys.
Hi.
Hey, Tiffany, good morning.
Thanks for joining me this morning. Let's talk a little bit about this, because since last time you were here, just sort of update us on your community efforts. Where are things at for you guys with the Leader Group?
Yeah, thank you so much for asking. We're actually really excited to announce some news. So as most of you know, we're committed to fighting the battle of childhood cancer. And we've been working as an office, donating our time and raising money for that cause. And we're far from where we want to be, but we're very, very happy to announce that we've just won the Northwestern Mutual Childhood Cancer Impact Award. So our office was granted $50,000 to put towards childhood cancer research.
Congratulations, that's huge. I know that takes a lot of hard work from all of the people in your group here in Milwaukee, and it's exciting that it's here in Milwaukee.
Yeah, we're super excited. Our team is great. We've done so much this past year and can't wait to see what we do in the next couple months and the next year.
Well, congratulations. I'm excited to hear that for you guys. Let's talk a little bit about the student loans, because I think so many people are confused with what they should do with them. So COVID-19, has that affected student loans? Is there something new to update people with?
Yeah, it has. Like it has in most walks of life, COVID-19 is kind of that magic thing that's messing everything up at this point in time. The good news is there's actually some relief from a student loan perspective in regards to student loans. So there's some legislation passed with the CARES Act at the end of March, basically giving borrowers some forgiveness, or forgiveness is the wrong word, excuse me, giving them some pass on student loans for the next 6 months. So what happens is on federal student loans, you do not need to make your payments, and interest is not accruing between the end of March and the end of September for all federal student loans. The ones that don't qualify are FFEL loans, but this matters for most people that do have those federal student loans. There's no penalty to continue to pay if you want to. If you're in a financial position to continue to pay, those dollars will go towards your balance or the accrued interest that's already been there. And then everything is basically going to pick right back up where it left off at the end of September from the end of March.
You know what, that's a nice break for a lot of people, just to know that that's an option for them, because right now I think any break matters to many of us. Yeah, so let's talk about student loans in general, though. Should you pay those down as soon as possible? What is your feeling on student loans?
It really depends. And what we try to do from a financial planning perspective is help people make logical or mathematical decisions as much as possible. And whenever we talk about debt or loans, anything like that, it's a very emotional topic. We're kind of programmed as humans to dislike that sort of thing. So the natural inclination as a human is to pay those things off as soon as possible because I hate debt. And what we really want to bring to the conversation is just some math and sometimes some logic to override some of that emotion. So the number that matters the most is that interest rate. A lot of times interest rates on student loans can be relatively low from a debt perspective compared to things like credit cards and some of those higher interest rate loans that are out there. So as an example, if your student loans are federal and they're somewhere in the high 3s or 4%, there's a lot of places, specifically sometimes the market, where you can put money and beat that interest rate. So this is obviously something that we got to take into consideration risk in the rest of your financial plan. But it might make sense just to pay that minimum and take anything additionally that you would overpay and put that somewhere else. Like your 401k, like additional investment vehicles. Keep in mind there is risk and other factors associated with making that decision. But it doesn't necessarily always mean it's in your best interest to pay it off as quickly as possible. I always try to work with clients and the individuals and families that I speak with about paying things back as efficiently as possible, and it's really figuring out what those interest rates are. So I would always ask you to counsel your trusted financial professional before making those decisions. But it might make you better off in the long run to just pay those minimums and put that money somewhere else.
I love that you brought up so many different interesting points there. The fact of how emotional money is for us, and I think that's so true. So using a financial advisor like yourselves, making sure that you're looking at it logically and mathematically and efficiently. I think all of those things matter so much. And just the thought that maybe 3% or 4%, you could still put it someplace that has a lower percentage. So if someone finds working with their financial advisor that that's the best option. How does refinancing work? It sounds like that's an option at times.
Yeah, it absolutely is. And again, trust your financial professional that you're working with before making that decision. But refinancing can often be a lot scarier than it actually is. Essentially, all you're doing is you're moving that loan from one lender to another when that other lender is going to give you a better interest rate. So usually what that means is you're going to pay less on a monthly basis, which is always nice from a cash flow perspective to have a little bit more money that you can either save and invest, or let's be honest, spend as well. And then essentially you would pay less in interest long term, which will save you money over the course of the loan. So to refinance, there's a lot of different places that you can do it, a lot of different lenders out there that offer different rates. So again, I'd encourage you to chat with your financial professional and really shop around on that, because you're trying to get that lowest interest rate as possible.
It's great advice. Emma, I know you guys are recruiting and I know you've got some events coming up. Do you want to fill us in on the Milwaukee event?
Yeah, so we're super excited. We're still actively recruiting, even though times are so crazy. So we can accommodate a few more interns and an additional full-time advisors. We're hosting an event this week, the 14th, all virtual. We're a huge, we do a lot of events with Milwaukee, so we're excited to see how the first one we're doing virtually turns out.
That's perfect. All right, I'm going to give the information. Thank you both so much for joining me this morning. I appreciate it.
Thank you.
Thank you.
Absolutely. So here's the May 14th event. It's Thursday, the 14th at noon. It's the virtual Milwaukee shift. You can learn more about that. It's free, but you do got to get a ticket at eventbrite.com. Then July 27th, there is a backup date for this in September in case, but Fairways and Feast golf outing, and that's going to benefit WMAC at the North Shore Country Club. So that's where you can find out more about that. And then here's how you can contact the leader group with Northwestern Mutual. It's downtown-mke.nm.com for more.